This is JEPI, the fan favorite on YouTube. The one giving a 12% yield with dividends paid out every month. The one that set a record in 2022 for the most inflows ever for an actively managed ETF. The same JEPI that has a massive risk factor that nobody ever talks about. And I'll give you a hint about this risk factor. I've already mentioned it in this video.
And the options also lower volatility and beta associated with the portfolio. So it is active.
One of the reasons why JEPI has such a larger expense ratio than other dividend ETFs like SCHD is because JEPI is not passively managed, but actively managed. It does not just examine stocks based on metrics and rebalancing every quarter. Instead, a man named Hamilton Reiner seeks to deliver monthly distributable income and get market exposure with less volatility with his team's stock moves. You see, in order to get the amazing returns that JEPI has delivered since its inception nearly 3 years ago, the team is using their own fundamental research and stock selection using proprietary data. The same concept can be applied when determining what call options to write when getting those juicy dividends. There's a reason why people love Berkshire Hathaway, right? It has a proven track record since 1965. Their leader, that is the Oracle, the one and only Warren Buffett, has led the group to 20% annualized returns every year since 1965. Absolutely amazing. In fact, Berkshire's gains are so amazing, if they pulled an SPV and they dropped 99% tomorrow in share price, since 1965, Berkshire would still have done better than the overall market. Now, I know you love Hamilton, but are you going to love him so much that you're going to ride and die with him 99% of the way down? It's been proven time and time again that actively managed funds underperform the market, and well over 90% of the time in a 10-year period, despite charging higher expense fees for being actively managed. Which means the vast majority of people are just better off buying a low-cost, passively managed index fund that replicates the return of an index like the S&P 500. You see, one of the reasons Berkshire has done so well is because Warren Buffett actually manages a portfolio with his team, and they make those investment decisions on a daily basis that have impacted the total return. He was able to pick securities and assets that have successfully outpaced the market average. One of the reasons people love JEPI so much is because Hamilton and his team have so far made investing decisions and managed our money very well. However, it's no guarantee Hamilton and his trade secrets are going to be there for us forever. After some intense stalking, I found out that he's in his late 50s, just a touch younger than Warren Buffett at 92 and a half. So he's quickly getting to that retirement age, and we all know he's probably getting some juicy bonuses from all of our assets under management, which keeps ballooning from all the free advertising I keep giving this ETF. What I'm getting at here is that there will be a day where Hamilton and his mad analytical skills aren't going to be running JEPI. We just have to hope when he's passed on that torch, he also passes on those strategies to his successor. Just like Warren Buffett named his successor for the day that he is no longer leading Berkshire. Unfortunately, I don't really like the sound of that. You see, we can't use past performance to predict future performance of stocks or any other investment. A well-known disclaimer in the finance industry. There's so much that changes every day with companies, whether that's a company's financial health, its growth potential, its competitors, interest rates, whether or not Snoop Dogg or Shaq are yet promoting it. So even if we are able to clone Hamilton, make his brain into a Hamilton chat GPT, we can't guarantee anything ever. This is why I always get a little worried when people tell me,
I'm 65 years old and I have 70% of my portfolio in JEPI.
This is an actively managed fund. You need to examine all the risk with this type of investment because 20% of this portfolio is in ELNs, which the vast majority of people have no idea what this is because JEPI is so coy about it. There could be a day when JEPI actually lags the market. There could be a day when JEPI's dividends aren't so fat. In fact, because of the upside capped with JEPI's covered calls, I can say with pretty high confidence that JEPI will lag the overall market during bull runs. However, I still keep a small percentage of my portfolio in JEPI because I enjoy the high yield during sideways and down markets like we're currently in. I also understand there's plenty of people that are in or close to retirement who aren't necessarily looking for capital appreciation and just want that extra stream of monthly predictable income. Humans tend to be bad investors because of their biases, emotional reactions, lack of knowledge, and discipline. This is actually why I love passively managed ETFs like SCID, SCHD, or DGRO, DGRO, because they use financial ratios and screeners to look for companies that have a history of paying dividends, are doing well financially, and have a healthy balance sheet. Our lives are already controlled in every way by algorithms all around us. Why not trust one more algorithm? It takes all the emotion out of investing. It's all facts over feelings, and we don't need to worry about any fund manager retiring as long as the objectives and criteria stay the same. That's not to say that there is no risk involved in passively managed ETFs, and the same past performance doesn't equal future performance guarantee still exists. It's just like when Chris Rock got on stage for Selective Outrage. It didn't mean that Will Smith was waiting in the trenches, waiting to slap him. Alright guys, I didn't make this video to scare anyone. Just know that when a fund is actively managed, it's only as good as its fund manager and the investing strategy. And statistically speaking, that strategy probably won't always work. Now, I've made tons of different videos on different income ETFs and dividend ETFs, so be sure to check out other videos on my channel. My full 6-figure stock portfolio with every position is on my Patreon, so be sure to join the Dividend Discord in the comments below. My videos are always found in podcast form under the Collect Cash podcast name. Leave me a comment if any actively managed funds have a place in your portfolio, and I will buy, stash, and collect cash you later.